And how do you see today shaping up? What is your word of the day?
Look, it's the consumer. I think the consumer is all important. We have a spate of economic data coming out today at 8:30 and tomorrow as well, of course, tied to initial jobless claims, GDP revisions, pending home sales, and tomorrow, of course, core PCE. So I think the labor market drives the consumer, and the consumer, of course, drives the U.S. economy. And we know, Frank, that historically, when the Fed starts to cut rates and when the yield curve uninverts, that's when the economy runs the biggest risk over the course of the next 12 months of potentially moving into a downturn. So I'm laser focused on the U.S. consumer at this point.
All right, so we're talking about how the consumer drives the markets. Let's also talk about how the Fed drives the markets. We have a lot of Fed speakers coming out today. Jay Powell, also Michelle Bowman, the lone dissenter in last week's meeting. How do you see the Fed influencing today's moves?
Yeah, we do have a lot of Fed speak coming out, and I think that everyone's going to be laser focused on where the Fed goes from here after the initial 50 basis point cut. Is it going to be an additional 50, or are they going to go to 25? So the market, of course, is continuously moved by what the Federal Reserve does. And I think tomorrow's core PCE is going to be really critical to that point. If we accelerate to 2.7%, which is what I'm expecting, we can see that the Fed's 2% target has not yet been hit. So I think the focus of the Fed is going to be overwhelmingly lopsided on the employment part of its dual mandate, kind of assuming that inflation will eventually get there. Now, of course, I'll add one more thing, Frank, which is the housing market. The housing market accounts for 1 full percentage point of that 2.7% of core PCE. So if the housing market decelerates in terms of rents, then the Fed could get there without a rollover in economic activity.
So, Kathryn, your pick for us today is utilities. In all fairness, it was your pick to start the year as well. Utilities having their best quarter since, I believe, 2003 right now. Do you see more upside? Like, what will be the driver for more upside? Don't you think most of it's already priced in?
Thanks, Frank. Yeah, last year, utilities was devastated. So this year was my top pick coming into this year. And I do think there's additional upside. But I would add to utilities, which is industrial real estate, because AI, this is a really great second derivative to the AI trade. So if you think, as a lot in the markets do, that the everything is awesome trade is going to continue to move higher, the U.S. economy avoids recession, and AI continues to lead the market, what's the second derivative? AI requires energy and industrial real estate. So that's the reason, the principal reason why I like the utilities trade. And as you said, it's one of the top performing sectors in the S&P.